So one of the most common questions I've been getting over the past few days is it too late to buy SMCI, Super Microcomputer? As you can see right here, the stock did 787%, and that is before the massive after hours run that it had just before the weekend kicked in, and it's now at over $1,000 per share. Now, the reason I get asked this question is because I actually made a video about it back in August of 2023, where I said, hey, I like the stock better than Nvidia for the next year. And in fact, it delivered big time. And the question right now is very simple. Is SMCI Super Microcomputer still a good purchase at $1,000? Now, we're going to do this super quick using Stock MVP. The link is below. You can get it, use it for 1 week for free, try it out, test it out, and if you like it, stay on board with us. We just crossed 5,000 users. So let's start with the MVP cards. The first thing I like about this company is the fact that its revenue structure is very healthy. It's not a 1 year outlier craziness that just happened in 2023. In fact, if you go back 3 years ago, they've been steadily growing their revenues from 3.3 to 6.6 to 9.3. So you can see the progression isn't about one crazy year. The company is growing and consistently doing so. The other thing I really like about this company is the fact that they give me 180% revenue growth in 3 years with only 50% in expenses costs. Now, operating expenses went up 50%, sales went up by 180%. I like that scalability. That means the company can squeeze the lemon a lot better than its competitors. Now, the operating income of the company grew by 22% in a year that they had a revenue growth of 39%. That's not bad at all. Net income over the past 3 years is up 673%. Cash and cash equivalents. So they're sitting on $725 million of cash with only $384 million of debt. So they have almost double the cash than debt. And the same story with assets to liabilities. $5.4 billion in assets and $2.3 billion in liabilities. And again, that hasn't changed. The company always had a very, very healthy balance sheet. Not a lot of debt compared to its cash and way more assets than liabilities. So on the balance sheet test, it passes with flying colors. On the revenue test, it passes with flying colors. On the scalability test, it passes with flying colors. But the question we're here to answer, is it too expensive? That's why we have to go down to these cards right here. Now, the gross profit margin of the company doesn't really matter here a lot because they're actually selling tangibles. So I don't expect to see 80% here. What I care about is the net profit margin. So at 8% net profit margin, this is a great margin company, especially given the fact that they're actually selling hardware. And hardware at 8% net profit margin, that's excellent. Now, the price to sales of the company right now is 5.5. That's not extremely expensive, no matter how you spin it. At 5.5 price to sales, you can't tell me that this company is exuberantly priced. However, if you look at the price to earnings, they're at 72. But as I always explain to you, never ever look at price to earnings. Always look at forward PE because this is historical. You have to look at forward PE to actually understand what's going on today. So the forward PE for the upcoming year is 31. So the PE you should be judging this company on is 31, not 72. And 31 is a hell of a lot closer to companies like Amazon, to companies like Microsoft, AMD, and Nvidia. All of them have a 30-ish forward PE, so that's not bad at all. Now, what I'm also excited about with this company is beyond the stuff that we just saw is that the beta is only 1.27, so this is not a volatile company. At 1.27 beta, this company is not going to overreact if the market all of a sudden dumps. It might sell off like crazy because of the recent hype, sure, but at 1.2 beta, 1.3 beta, this is a very stable company. Now, going a little bit forward into our model right here, let's look at our DCF, discounted cash flow valuation model we have here in Stock MVP, and let's run it to see what exactly is priced in and the current valuation of $900. And unfortunately, this is going to be a tall order. As you can see right here, you have the EBITDA numbers for the past 3 years, depreciation, amortization, and capital expenditures. So if we run this company through the model, we would require an EBITDA growth of 40% per year for the next 5 years with a 10% weighted average cost of capital to get to the current valuation. So this current valuation, in fact, right now we're at $1,000, so you're probably looking at, what, 45. Let's adjust real quick. And by the way, that's the beauty of this software. You can adjust super quick. So yeah, right now, you're probably looking at anywhere from 40 to 45 EBITDA growth rate for the next 5 years every single year. That's possible, but it is a very tall order. Now, if you go into our 5-year valuation model, the DCF you see right here, it's the current price. The current $1,000 price bakes in about 42% revenue growth, EBITDA growth. So that's $999. Yeah, so the current $1,000 price tag is 42% EBITDA growth. But if we go to the 5-year valuator we have here, the SEF, so the SEF basically gives us a range of where the stock can be in 5 years based on different assumptions. And the only two assumptions we changed here is the revenue growth rate. Right now, the company is growing at a 40% growth rate. You just saw it, and it might accelerate, it might decelerate. So what we've done here, we created a conservative 25% and an optimistic 50%. We kept everything else pretty much the same as it is today. And this is what we got. On a 5-year conservative, basically 25% growth rate, this is a $1,600 stock in 5 years, which means in 5 years, your return will be 80%. Now, on the middle ground, which means between 25 and 50, that's a $2,800 stock, which means that's a 200%, 213% for the next 5 years. And if you can achieve 50% revenue growth with this company for the next 5 years, this is a $4,000 stock, which means you're going to almost quadruple your money. But again, you're asking this company to give you 50% revenue growth for the next 5 years, and that's not an easy thing to achieve. Although with what this company has been doing over the past couple of weeks, couple of months, this is not something that's unimaginable. And now let's go to the Insiders tab on Stock MVP and let's look at what the insiders of this company have been doing and what the institutional shareholding of the company actually is. So this company has a nice 70% institutional shareholding, which is a beautiful number to have for stability, for actual seriousness of a company. You always want to see 2/3 owned by institutional shareholders. Now, the one thing that got me excited about this company, you can see on this end right here. When I was looking at this company back in August, what I got excited about is the fact that we had much more insider buys than sales. As you can see right here on Stock MVP, the acquisitions, the insider buying is in blue. The insider selling is in red. So when I was looking at this company in August, so much acquisitions, so little sales. And now I'm looking at the past 3 months, again, much more buys than sales on the insiders. So the insiders of the company are buying way more than they're selling. That indicator, although toned down a little bit, as you would expect with an 800% increase in share price, but at the end of the day, they're still buying way more than they're selling. And the institutional shareholding of the company, as you can see right here, is kind of steady over the past few quarters. Now, obviously, this is not going to be the same quality of deal you got in August when this thing was $250 per share. Right now, it is 4 times more expensive at $1,000. Now, before you all get excited about these price targets right here, I want to explain something important to you about this company that's beyond the numbers. Now, this company actually builds the servers that house the NVIDIA AI chips. The same AI chips the entire market is going gaga over. Well, these chips have to go into certain servers. These guys build the servers. That's why I like the correlation to NVIDIA stock back in August. Now, right now, they're not facing a lot of competition because they're basically working against Dell, against HP and others. Now, these guys are big corporate organizations. They have a wide offering. SMCI is focused specifically on the AI servers with NVIDIA chips that everybody wants. So they're getting all of the cake to themselves. But at some point, because they don't really have a moat, because they don't have any AI or know-how or patents, at some point, somebody can come along and build similar servers at cheaper and then take them out of business. So not having a moat, not having patents, not having IP that protects them is a huge problem you have to be aware of. It's a massive, massive risk. That's why I think this company is not the next NVIDIA. They don't have the know-how, the IP, and the protections and the moat of NVIDIA. That's not the next ASML. You have to be very, very careful. Don't be confused. Now, if you still want to buy this company at this price, don't go all in at one price point. Don't get excited and buy into a parabolic spike. That's not how you do it. Wait for some weakness before starting opening a position. Do it slowly over dollar cost averaging. Buy a little bit more when the stock price drops. Buy a little bit slower when the stock price starts to climb, and average your cost base towards the bottom over time. That's the only way to do it. Now, we can teach you how to do this. We don't have any stock picks on our Patreon. We don't tell you what to buy and what to sell, but we will teach you the skills on how to do it, on how to evaluate companies, how to model for yourself, how to become a better investor. Join our academy at patreon.com/Tom Nash. We would love to see you there. And if you just want to hang out with us, talk about this stock as well as other stocks, join our Discord. It's absolutely free to join. We do a lot of Q&A about stocks. We've done one last night up until like 2 a.m. where people just ask about stocks and we share our opinions. Join the server and hang out with us. Discord.gg/Tom Nash. We would love to see you there. Thank you so much. I'll see you in the next one.